Thank you. This is Shikama Live, your host, Kevin Cardinale. Today I would like to discuss Warren Buffett. What planet is Warren Buffett on? Recently, Warren Buffett has been appearing on the national scene, more so than before. He is now the darling of both the press and Washington. He figured prominently during the bailout talks when he invested $5 billion into Goldman Sachs. There was a proverbial gasp heard round the investing nation at the time because everyone knew the financials were in trouble. And in general, banking in specific. But let's look at his deal. At the time, the stock seemed like a steal. In fact, many thought he was taking advantage of the venerable bank. For Berkshire Hathaway, it bought a US $5 billion equity stake in the dominant player of the industry. And for its money, receives a guaranteed dividend of 10% a year on its perpetual preferred shares. On top of the Goldmans gave Berkshire 5-year warrants, which gives Berkshire Hathaway the right to buy 43.5 million common shares of Goldman Sachs at a stock price of $115 at any time before 2013. However, banking stocks tanked. The crisis deepened. Goldman shares hit a low of $47.41 on November 21st. After writing an op-ed piece for the New York Times on why he buys America, Mr. Buffett came in for the criticism. However, we're talking about Warren Buffett. I'm often reminded of the movie Wall Street when I think of him. Anything he purchases will sooner or later gather stragglers who mistrust their own investing skills. Goldman shares have doubled since November, closing at $111.93 a couple of Mondays ago. The investment bank has had to change its business model and reduce the amount of leverage it carries on its balance sheet. But some business areas are positively on fire with flow or client-driven trading, benefiting from widespread being charged and really bringing in the moolah. What a shocker. That actually works. For every silver lining, there is a cloud. The GE deal Berkshire Hathaway got with those same warrants don't look so delicious. The warrants for an aggregate cost of $3 billion at $22.25 a share. GE closed at $10.43. Yeah, not so much. Which brings me to the next point. Disciples of the value strategy, like Berkshire Hathaway, Warren Buffett coined, focus on the long-term intrinsic value of a company, hoping to buy shares in good companies at reasonable prices. For financial stocks, some of which haven't or won't survive the crisis, it's nearly impossible to identify the long-term value, whether through profits, cash flow, or other measures. But what are companies worth these days? What is the value of a company that accepts TARP money? Hard isn't the proper word for what investors are up against when trying to figure out the value of a company. Impossible is more like it. In these atrocious bailouts and stimulus packages flowing out of Washington and the Federal Reserve secretly. Psst, hey, AIG, come here in the alley. I got some more money for you. Are only hurting the situation. In the meantime, Buffett is seen publicly on TV talking about he praises Obama for his efforts and he's optimistic for the long term. Was that on a Hallmark card, Warren? Get well soon, America, from your buddy Warren. He's lost it. In fact, if you go back and look at Berkshire Hathaway's performance versus the Dow over the past 20 years, it has underperformed. Oh my God. Not the Sage of Omaha. Oh, brother. Yeah, he's lost it. Hell, he got lucky in the first place. He never had it, in my opinion. A study was done once. Some university economists, this is no joke, this is serious research here, wallpapered their class with the Wall Street Journal. Yay for a free plug at the Wall Street Journal. Blindfolded several students, gave them darts, and had them throw them. They picked the stocks that they landed on and invested in them. Don't try this at home, kids. These guys have PhDs. Every single student stock outperformed the Dow. Oh my God. And I would have gotten away with it if it weren't for you meddling kids. Apparently, they did this study for years. They concluded that the big performer investors are simply lucky and actually have no magical skills to predict good stocks. What do those study-nose professors of economics know anyway? So Warren, we're on a first-name basis now, says he's optimistic about the economy and Obama's the best thing is the bee's knees. Well, Peter Schiff, Ron Paul, Lou Rockwell, Judge Napolitano, Glenn Beck, I had to mention him to get all the kooky Fox News people to watch this, all say the same, all say the exact opposite. And I agree with them. But who's listening to me? Yes, I need a hug. Can vultures pick up the pieces Warren Buffett leaves behind? Sure. Mull over the carcasses of the straggler investors who follow him blindly. But be wary and trust your own learning. Read Adam Smith. Be an Austrian School of Economics disciple. These Keynesian economists are the darlings of Washington right now, since they chant, spend, spend, spend. For the rest of us, invest in gold, buy dividend-paying stocks overseas, stay away from cash and the dollar. When this hyperinflation hits, oh boy, don't you dare argue with me about that one. And it will hit. All of your cash in dollars is going to go up in smoke. How many billionaires were removed off of the Forbes billionaire list last time that they checked? Quite a few. Once again, this is Kevin DeCardinale. Thank you so much for tuning in. I welcome your comments and debates, or even a video response.